Okay, good evening, everyone. Hello, hi. Are you able to see me? Am I audible? Just drop me an S in the comment section. Okay, so welcome to the second session of the CMA final Saahas batch, paper number 13, Corporate and Economic Laws. This is Bhavya, as you all know. A very good evening, Shakir, Lakshmi, Prasanna. Good evening, good evening. Okay, thank you, Venkatesh. So yesterday we have seen the syllabus of our subject and the weightage that is allocated as per the ICMAI and our past question papers. So are we clear with the syllabus and the weightage? Lakshmi, Prasanna, Ganesh? Okay. So yeah, let's get started with the session. So today we will start with the first chapter, that is the Companies Act 2013. Okay, Chaitra, hi. So, yeah. So, as a qualified cost and management accountant or person who is studying CMA final, why should you have knowledge on Companies Act? Why are you supposed to know this law? Yes, Ganesh, Harsha. Anyone in the comment section? So, why should we learn corporate laws? Why should we learn company law? As a responsible citizen, okay, as a responsible citizen, you need to have basic law, but why company law? Okay, I will tell you why. So, why should a CMA study a corporate law? So, I hope you're able to see the screen. Yes? Yeah. So, from incorporation of the company, like starting stage of the company to the ending stage of the company, that is the liquidation, in every step or mostly all the steps, a qualified cost and management accountant is involved. Why? Because he's a professional. He has a knowledge of accounts, that is the financial statements, taxation laws, economics, and the main thing, statutory laws. Yes or no? So that is why he is involved. That is why he should learn the Companies Act 2030. So he will be involved in many situations like giving declarations, signing in various forms. He can be appointed as an independent director, valuation officer. What do you mean by valuation officer, Ganesh? The person who will value the value of the assets or the inventory. Yes or no? Yeah. Am I clear about that? Yeah. And of course, the main thing, cost auditor. We will be appointed as the cost auditor of the company. Yes or no? Yes. And the internal auditor. And the last thing, for the closing segment of the company, we are involved in that stage also as a liquidator. Yes. So that is why as CMA, we have to have a complete picture of the legal and statutory framework related to the companies. What is that statutory framework? The Companies Act 2013. Are we clear, Prasanna? Okay, okay. So, now, okay, now we have understood why a CMA should learn corporate law. So, we are part of companies, yes or no? So, how do we influence or how do companies influence the growth of our economy? So, as we can see in the picture here, so as per the GDP values, India is standing number 5, top 5 in the largest economies in the world. That is enormous because we have gained our independence recently, around 76 or 77 years ago. I'm not accurate about that. Okay, so with that amount of time, we are in a position of world's fifth largest economy. So that is because of the GDP growth, and the main contribution is from the companies. So how do companies influence GDP? How do a corporate company or a corporate organization influences the gross domestic product for an economy? Yes, export services produces lots of goods and services, foreign investment, and creation of employment. If it creates employment, it reduces the poverty, It will increase the growth rate of the economy. Yes or no? Yes. Am I clear? I'm not receiving any response from the YouTube students. Okay, fine. Yeah. So, see the records. These are enormous. The number of companies in India right now, the active companies, are around 14 lakhs 41,823. That means 14 lakh 41,823 companies. We are needed as a cost auditor, we are needed as an internal auditor, we are needed as a liquidator, we are needed as an independent director. So with this we can say that our job opportunities are enormous, because see the number of companies here, active companies, not only the dormant or inactive companies. Active companies number is only this much, and this is as per 2021. Now we are in 2024, so I think they have doubled almost. So we are très influential. That means we are very influential in the economy. Yes or no? So India outshines the major economies of the world, and it is the fastest growing economy. Fifth largest economy and number one fastest growing economy. So we have to contribute to the companies. The companies will contribute to the economy, and we have to be part in making India the first largest economy. Yes or no? This is a general knowledge purpose. People will not ask you in the examination. So we will move on to the next segment. That is, we are starting the Companies Act 2013, the first chapter, formation and conversion. Okay. Yeah, Parvati. Yes. Okay, fine. So, Companies Act 2013. The name only suggests that it is the year 2013 that the companies have started. That's why the legal regulatory framework has been also established in 2013. Is it true? Companies started in the year 2013? Of course not. So in India, the concept of Companies Act, the concept, the origin, the history starts from the year 1850. That means before the independence. So the first company that has been established in India is the East India Company, the Britishers, for trading our Indian spices, our opium, indigo, various dyes, because they are thinking that India has a lot of natural resources that we can trade on, that we can make profit on. So they have established a company in our country with the name East India Company. So that is how the Companies Act has took its origin in India. So the concept of Companies Act is taken from the English Companies Act 1844, as like many statutory laws and statutory act like Indian Contract Act, Sale of Goods Act, not LLP, but Partnership Act, everything has been taken from the British law. Likewise, Companies Act at the starting is also been taken from the English Companies Act 1844. Priyanka Chaudhary, a very good evening. Good evening. Okay. So just give me a moment. I think my pencil is not working. Yeah, it is. So in which year did the Companies Act came into India? 1850. Yes, this concept is there in your textbook, so you have to start paying attention from here. Okay, so the concept of Companies Act taken from the English Companies Act 1844. The first company legislation in India was passed in 1850, known as Joint Stock Company. Previously, companies are known as Joint Stock Company. What is the meaning of joint stock? People would jointly hold the stock, that means the shares of the company, and they will do the business. That is why the name has come like a joint stock company. Okay, Damodar. Yeah, good evening. So, and the next phase of the Companies Act is this act was replaced by the Joint Stock Companies Act 1857. So the first act was Joint Stock Companies Act 1850, and the second is the Joint Stock Companies Act 1857, which introduced the principle of limited liability. Why are all the organization or business entities being converted into a company, or why are they incorporating as a company? We have many other organizations like partnership firm or sole proprietary firm. Yes or no? But why are we choosing company? The one main advantage is the limited liability. Yes or no? If we invest as shareholders for around 1 lakh, your liability is only 1 lakh. Even if the company's liabilities are around 10 crores, what is your liability? limited to just 1 lakh. So that is the major advantage, and that advantage has been introduced in India in the year 1857 with the Act, Joint Stock Companies Act 1857. So am I clear, Parvati, Lakshmi, Prasanna? Please answer. I'm waiting for your replies. Okay, Prasanna. So you're clear? Yeah. Okay, Priyanka. Rani. Yes, 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 clear. Okay, done. So is the Joint Stock Companies Act 1857 still alive, still active? No. Again, we have seen amendments. Again, the act was repealed and a new act has been established. That is later on the Indian Companies Act 1931. Till now, that was under the name of Joint Stock Companies, taken from the English Companies Act 1844. But now, in the year 1913, the first Indian company law has been established, and the name was the Indian Companies Act 1930. So the first company law is originated in the year 1930 in India. Yes or no? But previously, before the independence, it was under the name of Joint Stock Company, which was created by the Britishers. Yes or no? Yes. So the first Indian Companies Act 1931 was passed, followed by the English Companies Act. Here also they have taken the rules and regulations and the limitations and everything from the English Companies Act 1908. After that, this act was amended and recasted several times almost every year, because we will be facing many issues based on that case laws, the court decisions, the jurisdictions. We will be doing amendments and we will be changing and recasting the act. So that is how we have gotten the 1956 Companies Act. Yes. So finally, after independence, this is the first company law. The Companies Act 1956 was passed and came into force on 1st April 1956, based on the English Companies Act 1943. Here also the laws have been taken from the English Companies Act 1943. So the first Indian company law was during the year 1913, and the next amended law was 1956. So this law consisted of 658 sections and 15 schedules. Oh my God. So people who are studying law before 2013, they used to study these many sections and these many schedules. But after many amendments, around 25 amendments to the Companies Act 1956, a new company law has been evolved that we are studying now, is the Companies Act 2013, which is passed by the Parliament as each and every law. It came into force on 29th of August 2013. This law has been through amendments also many times till 2024 also, but that amendments did not lead to a new act, but it was the old act itself, the Companies Act 2013. So this Companies Act 2013 has around 29 chapters, 470 sections and 7 schedules. You might be thinking only 470 sections are subsections, clauses, side headings and provisions, provisos, all are there, which is enormous. So but on the face, it is just 470 sections, 29 chapters and 7 schedule. In this 7th schedule, 3rd schedule is related to the preparation presentation of the financial statements for the company that you will learn in your CFR, Corporate Financial Reporting, in group number 4. So are we clear with the origin of the Companies Act 2013? So first in India, the company law was established in the year 1850. Yes. And then in 1857, that joint stock companies was created with a new feature. What is it? The principle of limited liability. Limited liability, one of the most advantageous thing in companies. Yes or no? Yes. And then the first Indian Companies Act came in the year 1913. It has gone through many amendments, and then we have got our first Companies Act after independence, which is the Companies Act 1956. But now we are reading the Companies Act 2013, which has around 29 chapters, 470 sections and 7 schedules. Okay, done. So are we clear, everyone? So let's get into the next topic, shall we? Okay, done. So who administers the Companies Act 2013? Of course, every law, every statutory enactment is administered by the central government, but it will establish many bodies to govern many functions. So likewise, Companies Act 2013 is also administered by the central government, of course, through which bodies? The Ministry of Corporate Affairs, MCA, for every purpose, for incorporation, for liquidation, for changing the name of the company, for searching the name of the company, and in many situations we will be using the Ministry of Corporate Affairs, and it will regulate and administer the Companies Act 2013 and the companies incorporated under that particular act or the previous Companies Act, that is the Companies Act 1956. Are we clear, Ganesh and Harsha? Okay. So, and another body is the Registrar of Companies, ROC. This term we will be going through often in the syllabus. So, Registrar of Companies controls the tasks of incorporation of the company. All the documents, the accounts and everything will be registered in the ROC, and each and every state has a particular ROC, but Maharashtra and Tamil Nadu has around 2 ROCs. So yeah, we will discuss that in detail in the incorporation segment. And the next body is the National Company Law Tribunal, NCLT, and the National Company Law Appellate Tribunal, NCLAT. Okay, and then we have official liquidators, director of inspection. All these bodies are for the purpose of administration, regulation of the Companies Act. Who is monitoring these all bodies? The central government. Are we clear? Yes. Okay, Shakir. Yes, now let's start the meaning of the word company. So what's the origin of the word company from? It is from the Latin word cum means together and pennies means bread. Bread company, yeah. What is the relation, madam? So previously, when the merchants used to do business, they used to come together, go through. I mean, they have to do the trading business, and they will share bread. So that is how the origin of the word has come. Okay, yeah. So the merchants would gather, share stories, eat together and trade. So that is why we got the origin as the come together. Pennies means bread. So they will come together, do business and share bread. Nothing but they will share the profits. Bread here means profits. So now you know the origin of the term company from the Latin word company. Come means together. Pennies means bread. Why bread is involved, Ganesh? That time they didn't had that pappannam and all that stuff, no? They used to share bread. Okay. So for those who don't know Telugu, pappannam is that parapu sadam, Tamil, and dal chawal, Hindi. Okay. So yeah. So let's start with the main thing in our syllabus, that is the definition of the company. As per the Companies Act 2013, company means company incorporated under the act or under the previous company law. So incorporated under the act means which act? Companies Act 2013, and under the previous company law means the Companies Act 1956. What is the definition of the company now? Company means a company incorporated under this act or any previous law. Okay. But the main meaning of the company is an artificial legal juristic person. Company can't breathe. Company can't get into this romantic relationships and all that stuff. But company can act on behalf of these all human beings as a legal and artificial jurisdiction person which can run the business activities. Yes. So the meaning is the company is an artificial, that means it's not natural person, legal and juristic person separate from its members having perpetual existence. Perpetual existence means forever, it can continue forever. That thing in detail we will be learning in the features of the company. So the meaning of incorporated company is this sentence, that is the company is an artificial, legal and juristic person from its members, separate from its members, having perpetual existence. So this is the meaning of an incorporated company or a corporation. What about unincorporated company? Not registered under this act, such as the partnership organization or the AOP, association of persons, is a collection of individuals and they do not have separate legal entity. So partnership firm, is there any separate legal entity to the partnership firm? No. The main persons, the managers or the owners, both are same, nothing but the partners. They don't have any separate legal entity, they don't have any shares. So they will come under the term unincorporated company. They are also individuals doing business together, but they are unincorporated under this act. Got it? Are we clear, Ganesh? Prasanna, Parvati, Shakir, Priyanka Chaudhary, are we clear? So what is the definition of Companies Act as per the Companies Act 2013? Company means a company incorporated under this act or under the previous company law. Clear, Prasanna? Okay, thank you. So, but the meaning of the company really is, the company is an artificial, legal and juristic person separate from its members, having perpetual existence, incorporated company or a corporation. Unincorporated is not registered under this act. Example is a partnership firm or AOP or LLP or whatever it is. Okay, done. So let's get into the features of the company. What are the characteristics of the company? Qualities of a person, likewise qualities of a company. Okay, so the first feature, first quality of a company is independent corporate existence. In your CA foundation law, if you are a CA student, but I'm coming back to the CMA thing. In CMA Inter, you might have seen the features of the company as a first thing is a separate legal entity. Now they have come up with a new feature. Same meaning but different terminology. Independent corporate existence, also known as separate legal entity. It is distinct legal person existing independent of its members, irrespective of who is operating the company, irrespective of who are the owners of the company. Company will have a separate identity, separate legal identity, separate artificial person it is. Yes? Okay, so that is the main feature. It is separate from its members. Members' liabilities are different from the company's liabilities. Company will own property, that doesn't mean the members are owning that property. Company is running the operation, that doesn't mean the members or the owners are running the operation. Company is the main person who is involved in the business. Got it? So, independent corporate existence means separate legal entity. It has a different identity. It is a distinct legal person existing independent of its members, irrespective of who are the members. Members can go die, they become insolvent, but the company will be there because they are not related to me only. Okay. By incorporation under the act, the company gains a corporate personality. If you get incorporated, if you get registered under the Companies Act 2013, you will get your corporate personality. Not you. Company will get its corporate personality. Okay. So to explain this feature, the popular case law is the Salomon versus the Salomon and Company Limited. You might have come across this case law, but you don't know what the case law means. You will just quote the case law name, but you don't know what the case law is really. So I will be explaining the real case that has happened in this particular situation. So this is a landmark case under the UK company law, not Indian company law. This is the landmark case which has happened under the UK company law. What is the full form of UK? Wonderful. Okay. To uphold doctrine of corporate personality under the Companies Act 1866. Because of this case law, came out with that corporate personality. Okay, different corporate personality for the company or for the business organization. So the facts of this case is Mr. Aaron Salomon has a sole proprietary concern. So the first thing that you have established for running his business activities is sole proprietary concern. Okay, is sole proprietary concern same as a company? No. There we have unlimited liability and the member, the owner and the management, same one person, sole proprietary, the one particular person. Yes, of his leather boots and shoe business. What business it is? Leather boots and shoe business it is. Okay. Later on, he turned the business into a limited liability company. That means nothing but a company. You might be wondering, oh, it is an LLP. No, company is there here. Limited liability company. It's not the partnership. So before it was a sole proprietary concern, he has converted into a LLP, that is the limited liability company. Okay, not LLP, limited liability company, that is a private company. So total shares of the company were of the value 40,000 and the value of one share is 1 rupee. Okay, very good. And you might be wondering, it's UK, no? Not rupees, ma'am, pounds. Just don't care about the denominations, read the facts of the law. Okay, so the total shares of the company were 40,000 and the value of one share was rupees 1. And there were total 7 subscribers. That means 7 members were there to the company. And Salomon, who is the owner of the company, was having 2,000 shares. He's the owner of 2,000 shares and 10,000 debentures. Debentures means secured debtors. Yes or no? Yes. His wife has 1 share. Okay. Wife ke liye he has given 1 share. Wonderful. So sweet husband. One share for the daughter and 1 share for 4 sons. Okay. He is a great father also. Yes or no? Yes. So he has given 1 share to his wife, 1 share to his daughter, and 1 share for each of his 4 sons. Okay, fine. After 1 year, the company was liquidated. Oh my God, unfortunately, the company got liquidated with 6,000 assets. Around 6,000 rupees of assets were there, but the liabilities were 17,000. So what is this case called? Insolvency. When the liabilities are more than your assets, what happens? You will become insolvent and then you will go to the process of liquidation. Yes. And then Salomon's liability was 10,000 and unsecured creditors liability was 7,000. How is it Salomon's liability 10,000? Because he's holding 10,000 debentures, no? Yes or no? Even if he has incorporated the company, but he's the member and he has invested in 10,000 debentures. So now what comes to the picture? Company and Salomon are different. So Salomon is owning 10,000 debentures. So if the company is liquidating, what is the first thing that the company should do? Company should pay secure creditors liability. Yes or no? Now who is the secured creditor? So who is the secured creditor here? Nothing but the Salomon, because he is holding 10,000 debentures. Yes or no? And then the unsecured creditors liability 7,000. For whom should we pay first as per the Companies Act? Secured loans. Yes or no? So first we have to pay the Salomon's liability and then the unsecured creditors liability of 7,000. And if the liabilities are left out, then we have to pay to the shareholders. But we have only around 17,000 liabilities. So that's fine. Next. What are the issues raised from this case? Was the formation of Salomon's company a fraud intended to defraud the creditor? Is he incorporating the company to defraud the creditor? No, unfortunately, it has got liquidated. Yes. So, whenever the company is considered to be an artificial person, whether the company is considered to be an artificial person created by the law. Yes or no? As per the Companies Act 2013, is company a natural person or an artificial person? Artificial person. Yes. Whether the person can be liable for the debts of the company. Can Salomon be liable to the debts of the company? No, because Salomon is the member. He's separate from the management. Yes or no? And he's separate from the legal identity of the company. Whether the limited liabilities of the company falls to whom? Who will be having the limited liabilities? In case of company, the members, the shareholders will have the limited liabilities. So these are the questions raised in that case. So what are the arguments and what are the judgment? We will see now. So the arguments are that the unsecured creditor claim as a first right to receive because there is no separate legal existence and the company was acting as Salomon's agent. Now, the argument of the unsecured creditors. Unsecured creditors means who have lent the money to the Salomon Private Limited Company and now they want the money back because the company is liquidated. Now, their argument is that now Salomon has established the company, right? So, how can he be different from the company? How can you say it's a separate legal existence? We want our liability to be fulfilled first. So, that's the argument. But the judgment as per the court was C. The court said that on incorporation, the company becomes an independent legal person and not an agent of Salomon. Now, Salomon is not using the company as an agent to do the business. He has incorporated the organization as the company. That means there is a separate existence for both of them. Companies having a separate legal identity, and he has a separate identity. He is the member. He is not liable to pay the debts of the company. Got it? After the incorporation, if it used to be a sole proprietorship, who is responsible to pay the debts? Salomon. Yes. So Salomon, as a debenture holder of the company, was ought to get priority in payment over the unsecured creditor. Did you understand the case? So now the proprietary concern has been converted into a company. Now in that company, Salomon is holding around 20,000 shares and 10,000 debentures. That 10,000 debentures is nothing but the secured creditor. Yes or no? Now, as soon as he converted this whole proprietorship concern into a company, now he's completely different from that company. His company will have a separate legal existence, and Salomon is not responsible for the debts of the company. His liability will become limited. Yes, are we clear? So now the judgment is that Salomon is not considering the company as an agent. He is a separate person. He is not liable to pay. So the first liability that we have to clear is the secured creditors, that is nothing but the 10,000 debentures of Salomon. Are we clear? So from this law, the main thing that we have to take is company is a separate legal entity irrespective of its members. Members are not the face of the company. Okay, got it? Are we clear with this feature? My dear YouTube students, please answer. So did you understand the Salomon versus the Salomon Company Limited case? Even if you don't understand the case, the one thing that you have to take input from this case is that the company is a separate legal entity and it is different from its members. Okay, Shakir. Yes. Okay, Prasanna. Huh? Yeah, as per the business entity concept in your accounts. Yeah. Now, the second features, understood, Parvati. Okay, thank you. So the second feature of the business organization, that is the company, is the limited liability. When did this origin in India? 1857. Yes, the Joint Stock Companies Act 1857, they have introduced the concept of limited liability. So it is one of the principal advantages, that the main advantages of doing business under the corporate form of organization. Yes or no? Partnership firm or sole proprietary concern or any other concern, the liability of the members or the owners that invest in the company is unlimited. When it comes to an insolvent position, they have to pay from their personal liabilities. But when it comes to company, their guarantee, the members' liability. Just give me a moment. The members' liability becomes limited or restricted to the nominal value of the shares. What is the meaning of nominal value? Face value of the share. You will see while solving the problems in your accounts. Yes or no? Face value is 10 rupees. Current market value is around 200 rupees. So they're limited. Their liability is restricted to the face value. That is the 10 rupees or the nominal value. Okay. So, or the amount guaranteed by them. You have seen the company is incorporated as limited by shares, limited by guarantee. Limited by guarantee means the members will give guarantee that I will give this much amount. So that amount they will be liable for. And no member is bound to contribute anything more than that. Anything more than the nominal value of his shares or anything more than the amount guaranteed by him, he is not liable for. That is the feature of limited liability. In the normal course, a shareholder is liable to pay for the shares as and when it is called up. Yes, they will call up for the remaining value of the share. For example, they have issued some shares and they have asked for the application amount to be just 2 rupees out of 10 rupees. So they will call for the remaining 8 rupees. So that time he is liable to pay for that called up amount. In case of default, the shares may be forfeited and the shares no more remains a shareholder. So if he is not paying that called up money, his share will be forfeited. That means his share capital will be cancelled and the shareholder will no more remain as the shareholder of the company. That's why you are not paying the debts. Who will put you in the company? Yes or no? Yes. Did you understand the feature of limited liability? It is the principal advantage of doing business under the corporate form of the organization. And the liability of the members is restricted to the nominal value of the share or the amount guaranteed by them. Done? Yes. And next feature of the company is the perpetual succession. We have seen the word perpetual succession in the meaning of the company, right? So, what is the meaning of perpetuality? Forever. The succession. The company will forever operate its business activities irrespective of the existence or death or insolvency of its members. So, the death, insolvency of individual members does not affect the corporate existence of the company. Even if the members, that means the investor or the management or the director or the shareholder, whoever it is, the persons involved in the company, they if they will face death or any insolvency, that doesn't impact the existence of the company. So the insolvency here nothing but when the liabilities are more than the assets and you are unable to pay your liabilities of individual members does not affect the corporate existence of the company. Here we are seeing another case law, that is the Gopalpur Tea Company Limited versus the Pennock Tea Company Limited. This case law is stating a famous phrase called the members may come and go, but the company can go on forever. Members, you come and go. We don't care about you. The company will stay forever. Okay. So what, from which case law this phrase has been taken from? The Gopalpur Tea Co Limited versus the Pennock Tea Co Limited. The phrase is members may come and go, but the company can go on forever and ever and ever. Yes, you will say no. My love is forever. The company, my existence is forever. Like that. So there are many companies in India which were formed 100 years before. Now the people who have formed are no more, but the company remains. Of course, the companies have been, there are many companies are operating more than 100 years in India or outside India, but are the members still alive? How can you expect them to be alive if the company is more than 100 years? It's a different case. Yes, no? So that is why, irrespective of the death or insolvency of the company will still exist and operate its activities. Okay, that means there is no death for the company. Yeah? When the company is in a position of liquidity or insolvency, you have to close the company, and that's a different situation. Okay, so now when we are coming to the 100 years company, India's oldest company is the Bhavya Group. Oldest company, when is it established? 1736. Okay, 1736 when company is established, that's fine, it's still operating. That is the miracle here. So India's oldest company, the name is Vadia Group. The company's name is not Vadia Group. The conglomerate name is the Vadia Group. Do you know the meaning of conglomerate? You have seen some relations, like vertical agreement, horizontal agreement, conglomerate agreement. Even if it is not related to the business, we will enter into the agreement for that person, or we will take the control of that person. You got it. Wow. What an intelligence. Lost goods in mercantile law. Okay, okay. You went to Sale of Goods Act. Okay, fine. Come back to Companies Act. So it has been operating for 288 years, and the founder is Vadia. I'm not gonna read his name because it's complicated. The headquarters is in Mumbai. So Ganesh, if you don't mind, read out that name for me. Not able to see ya. Wait, I'll just zoom it for you. The name of the founder. Lovji Nusserwanji Wadia. Different name. We should not make fun of him because he has established such a big organization. Yes. So this company, this conglomerate is involved in textiles, aviation, chemicals, food processing, plantations, media, real estate. Oh my God, everything it has covered. Real estate, media means that the cinema industry also it has covered. Oh my God. So, but in the year 1736, what is the purpose of the Wadia group? The Wadia group has been established in Surat, that means in Gujarat, to manufacture boats for the export and import of trades for the East India Company. So that is why it's the India's oldest company, the first company established. Okay, so are we clear? Rani, 4 5s, 5555. ID name. Okay, the revenue and equity is also mentioned. 28,000 crores is the revenue and 51,400 is the total equity of this Vadia group, because it's operating from around 288 years ago. So the famous outlet for the clothes, the Bombay Dyeing and Britannia Industries, Punjab Kings, the IPL team from the state Punjab, even these all entities come under the Wadia group. So another classic example for old companies is Tata Co Limited. It has been established in the year 1868 as a trading business. First, it has been established as a trading business, but now it has opened its wings in many areas like Tata Motors, Tata Steel, Taj Steel, TCS. Tata has purchased many car brands also, Jaguar, Land Rover. Any Jaguar fans, please comment. Okay, Ganesh, which car fan are you? Bus stand. Mustang. I heard it as bus stand. Okay. Sorry if I spell it wrong. What is the company's name? Ford Mustang. I've never seen that car. Okay, so let's complete the features of the company and we'll close the session for today. Okay, so the next feature is the separate property as separate owner. A company, being a legal person, as we've seen in the first feature, is capable of owning, enjoying, and disposing of property. Disposing means it can sell the property, it can sell the property. So, company, irrespective of the name, it can, in its own name, can purchase a property, be it an asset or a car or a building or a machinery or an equipment, whatever the asset it is, it can own, enjoy, dispose by itself. Okay, and the company becomes the owner of its capital and assets. The shareholders are not the several or joint owners. The shareholders are not the owners of the company. Okay, owners of the company or the property the company owns. That property is in the name of the company, and the company as a legal person is the owner of that particular property. All the assets which are in the financial statements, the true owner, the real owner is the legal person, that is the company. Okay, done. So if in Reliance Industries financial statements, the assets, there's a particular building of around value of around 200 crores, who is the owner of that building? Ambani or Ambani or Reliance Industries? Out of the box, no. If it is in the financial statements as an asset for that particular company, the owner is that company, not the person who has started that company or not the person who is running that company. Ambani is not the owner for that particular asset. If the financial statement in that assets column is stating a particular property or asset or an equipment, the owner of this particular asset will be the company, not the shareholder or the manager of the director. So that is what this feature is saying. Separate property as a separate owner. Okay, but in reality, who is using that property, that we don't care. Okay, done. So did you understand this? Okay, Rani, thank you. Okay, Shilpa. So the next feature is the transferability of shares. In case of company, shares should be capable of being easily transferred. When it comes to partnership concern or any other concern, the capital invested is not divided into shares. It is not transferred into shares. If you want to come out of that particular partnership firm, you will be dismissed as a partner and your amount will be given as a partner, but not as a share. Okay, but in case of company, the capital which is invested by the shareholders is named as shares, and they are divided into many units. Yes or no? So they can be easily transferred and it will show a liquidity to that particular shareholder. It is the benefit of the shareholder. Accordingly, The Companies Act 2013 in section 44 declares the shares or debentures or other interest of any member in company. Any interest shall be, interest that means preference shareholders, debenture holders or any stockholders, shall be a movable property. The shares or the debentures or any other property that shareholders or the members are interested in shall be a movable property and transferable in the manner provided by the articles of association. If the articles is saying that the shares should not be transferred to the public, so you should not transfer. So as per the articles, the transferability and the movability of that particular property, that is the shares or debentures, is decided. Thus, the incorporation enables a member to sell his shares in the open market and to get back his investment. If a particular shareholder wants his money back or he's not interested to be continued as a shareholder, he can simply sell his shares in the market or any private shareholder and he can get back his money. Likewise, for public company also you can sell in that stock market. Thus, the incorporation enables a member to sell his shares in the open market and get back. So this is providing liquidity to the investor and stability to the company. Okay, so the company need not give the funds back to the members. Simply the member can sell his shares to another person and get the money. But if it is a partnership company and all the members wants to get out of that partnership firm, what they have to do? They have to take the money from that partnership concern. Will the concern be stable? The company will be closed if all the members have gone. But if the members are not interested in case of a company, what happens? He will sell the share to another person. He will get the quality of liquidity and the company also will be stable. So that is the advantage. It provides liquidity and stability to the company. Liquidity to investor, stability to the company. So the transferability of shares is one of the features of the corporate form of the organization, that is the company. And the last feature is common seal. That stamp will be there, no? They'll do. So that is the common seal for the company. Is it mandatory or is it voluntary? Mandatory. Huh? So there has been amendment for this Companies Act and now it is optional, not mandatory. Okay, now let's see why. The prior to the Companies Amendment Act 2015, in 2015 there has been an amendment. Before that, before the amendment, the common seal is a seal, stamp like kind of thing, used by a corporation as the symbol of its incorporation, that we are incorporated. This is the symbol, our common seal. This is the symbol that we have been incorporated and we are running our operations. And also a statutory requirement for a company. If you have to own a property, if you have to sell something, or if you have to involve any business, export something, or for foreign investment, the statutory requirement here is a common seal, not a signature. Common seal. But now it is optional. But now after this amendment 2015, this is an optional thing. You don't need to have a common seal. So if you don't need to have a common seal, who will sign in the agreements, madam? Who will enter into the agreement? So what is the proof? What is the physical proof? So in case the company does not have a common seal, the authorization shall be made by two directors. The first case, the authorization for anything should be made by two directors, or if two directors are not there, or if there is a company secretary. So if the common seal is not there, first thing is you have to, the particular certificate or declaration is to be authorized by two directors. But in that company, if they appoint, just give me a moment, a company secretary, who? A CS, not a CA or not a CMA, but a company secretary is appointed to that company. Then who has to authorize that particular certificate or declaration? One director and the CS. So these two persons has to authorize in place of the common seal. Got it? So in case the company has opted to have a common seal, that's fine. You can use the common seal as per the act requirement or the articles requirement. So is the common seal optional or mandatory now? Now it's optional. But if you already have a common seal in your company, you have to use that as an authorization. But if you don't have, the authorization should be made by two directors or if you have a CS in your company appointed, then one director and that particular company secretary. Got it? Are we clear, everyone? Parvati, Lakshmi Prasanna, Shilpa, Shakir, Priyanka, Rani, Sanju. Everybody, are we clear with we are done with the features of the company? So what are all the features that we have seen? Number one is independent corporate existence. Independent corporate existence, another word is separate legal entity. And the next thing is limited liability. Limited liability, the liability is limited to the value of your nominal shares or the amount guaranteed. And the third feature is perpetual succession. Members may come and go, but the company will stay forever. And the next feature is separate property as separate owners. The properties that is in the asset column is the property in the name of the company and the property of that legal person. And the next feature is the transferability of shares. The shares can be easily transferred in case of the company organization. And common seal, it is optional, and the authorization has to be made by 2 directors or 1 director and 1 company secretary. So these are the features of the company. The first session is a little slow, but from the previous session, if we know the basics of the Companies Act, we can go fast. This chapter is where we learn the terminology and the definitions. So we will be going in a little detailed and slow manner, but that doesn't mean that the portion will be delayed. We will complete our syllabus on time. Got it? So I'm going to end the session today because you have your DT class at 8 o'clock, but it's already 8:10. Sorry, Bhaskar sir. So I'm closing the session. So if you have any more doubts, you can just ask me. I'm going to give you 2 minutes. Ganesh, doubts, my dear? What is the definition of the company? Oh, wonderful. Easy definition. Gosh, the Companies Act also easy like this. But no, it's not. So we have company name has been origin from the term, Latin term, cum means together, pennies means bread. Okay, done. Who are the administration and regulatory body of the Companies Act? The central government through bodies of Ministry of Corporate Affairs, Registrar of Companies, NCLT, NCLAT, official liquidators, Director of Inspection. Even if you don't know these terms, it's okay. We will be discussing in detail. So I think we are clear about the session. So nobody has any doubts. That's fine. I'm going to close the session. Thank you so much. If you have any doubts, you can post it in the next class. Tomorrow also I will be live on YouTube, so you can post that time. Fine. Thank you, Ganesh. Thank you, Harsha. Thank you, Malli. Thank you so much. Okay, fine. Bye. బాబు ల్యాప్టాప్తో మాట్లాడుతున్నట్టుంది హాయ్ చెప్తుంటే ఓ మై గాడ్ నాకు వచ్చింది ఫ్లూయెంట్గా థ్యాంక్ యూ 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 అట్లేం లేదు చిన్నప్పటి నుంచి ఇంగ్లీష్ వస్తుంది నాకు తెలుగు లేదు 8th క్లాస్ నుంచి కాబట్టి Oh my God.